How did reverse mortgages get such a bad rap? My name is Bruce Simmons, and I've been originating reverse mortgages since 2003. I've seen a lot go on in this industry. Today, though, what I want to talk about are the 4 reasons why I think reverse mortgages have this bad rap that they just can't seem to shake. Number 1 is back in the day, before 1988, there were all kinds of reverse mortgages and it was just becoming a thing. And what would happen is that people would take out a reverse mortgage and not really be 100% sure what they were getting. Sometimes there were equity sharing programs. People didn't know that. And what would happen is they take out a loan and their home appreciated $100,000. Well, the lender got the interest on the money that the person borrowed, but they also got 50% or 40% or whatever of the equity growth in the house. So the house appreciated by $100,000 or $50,000, and the lender would get half of that sometimes, and people would be upset about that, obviously. Another thing that would happen, and I can't guarantee this because I haven't seen verification of it, but I think sometimes people did think they had a reverse mortgage when actually what they had was they sold their house to the lender and the lender let them live there. And then at the end of the loan, when the person left the home or passed away, the lender just took the house. In 1988, President Reagan signed the bill allowing reverse mortgages to become an FHA insured program. And all FHA insured reverse mortgages, called home equity conversion mortgages, now do not allow those things, okay? So there's a lot of misconception that leads back decades because this loan's been around for 34 years or something like that now as an FHA insured program. But people still keep these things in their mind. The other thing that happened actually is a combination of events that coalesced into a problem. It was a combination in 2008. We know that 2008 was when the Great Recession happened and values dropped quite a bit. But at the same time, FHA they began just at that time allowing fixed rate reverse mortgages. What could be wrong with that, right? Fixed rates are good because at that time, people had in their mind, all these houses are getting foreclosed on because they had an adjustable rate. Up to that point, all reverse mortgages, all FHA insured reverse mortgages were adjustable rates. They didn't have a fixed rate. But the caveat with the fixed rate was that people had to take all the money in one lump sum. It was only available as a closed-end loan. There was no line of credit available, and there's no monthly payment. A lot of people were taking payments on a monthly basis early in the reverse mortgage program. And they also had lines of credit. Well, those were not available with the fixed rate. So what happened then, the other thing that conspired with that event was a lot of people in the mortgage industry who were in the subprime mortgage realized this house of cards is falling apart. And I think we better find a new gig. Well, hey, did you hear about reverse mortgages? Nobody has to pay anybody anything and nobody cares, right? It's easy. That's what they thought. And in a way, that's the way it was because there was no credit requirement at that time and there was no income requirement. Well, what happened is these people went out and sold this loan on a fixed rate basis because they were making a lot of money because they got paid based on the loan amount. Well, the fixed rate requires you to take out a whole lot of money and people might make 5 to 10% of the loan amount. So if they found a homeowner who wanted to take out $150,000 mortgage because they wanted a fixed rate, they didn't want to set up a line of credit or a monthly payment because those are bad. They were adjustable rates, right? So they would get 10% or whatever of that $150,000, which was $15,000. Well, that's a great gig. These guys were scraping by making $2,000, $3,000, $4,000, $5,000 on these subprime loans, and now they can make a whole lot more on reverse. Woo! That's what they thought. And the people who'd been in the industry like me for a long time up to that point were like, what the heck's going on here? 70% of loans originated during I think 2008 and 2012 were fixed rate loans, meaning that they took all the money out. And there were some irresponsible homeowners who did that. They did not keep up on their property taxes and their homeowners insurance. They didn't maintain their home. And those are rules. There's rules that you have to maintain the home and pay your taxes and insurance because it's still your house, right? If you take a reverse mortgage out, it's still your house. You have to live there as your primary residence and keep your name on title, maintain the home, and pay your property taxes and insurance. If you didn't do those things, then you were in default and you could be foreclosed on. And what happened around that time is the big lenders, and I'm not going to say any names, I like to call them the evil empire, but basically they said, hey, you know what? Foreclosing on grandma is not a good business model. We better get out of this business. So they got out, but in the meantime, HUD made some changes. And they came up with financial assessment where now we have to qualify people to make sure they have enough income to pay their taxes and insurance and that they've got good credit, things like that. Now, there's ways around those requirements. If you do have bad credit or whatever, we could pay the taxes and insurance for you if you have enough equity. So we changed the rules. So that is no longer a problem. But again, just like in the first instance, this one, that attitude still perceives that, hey, reverse mortgages are a ripoff, you're going to lose your house, or things of that nature. Other things are like misconceptions from the family, okay? Let's say mom and dad get a reverse mortgage on their home and little Johnny doesn't know about it. Well, 10 years later, now little Johnny's 50, 55, 60 years old and mom passes away. He thinks mom owns the home free and clear. He didn't stop to think about how mom was paying for all the grandkids to come visit them or these great presents, or how she was going out to lunch every week after church, things like this, or fixing up her home, all these things that the reverse mortgage provided. Now he sees, there's a mortgage here for $150,000 and he didn't know about it. And if the value dropped, let's say it's 2009 or 10, and the value is less than the amount owed, he's not responsible. The way reverse mortgages work with FHA mortgage insurance is you never can pass a debt beyond the value of the home to your heirs or your estate. But there's no equity left. So here he thought he was going to inherit a free and clear house, and he doesn't. Well, the news media finds out about it, and Johnny got ripped off by this reverse mortgage. Boom, more negative press, okay? So those things are bad. And then the other thing, lastly, the fourth thing that really kind of affected people in a negative way was non-borrowing spouses. Back in the day, there used to be some lenders that would take the younger spouse off title. The younger spouse comes off title because the older spouse can get more money. We base the amount we could loan on the age of the youngest spouse, the value of the home, and the interest rates. So the higher the interest rate, the younger the youngest person is, the less money somebody gets. The older they are, the lower the rate, the more money you get. So let's say you got a husband who's 75 who's married to a 60-year-old, okay? He says, hey, I want a reverse mortgage, but we can't do it because the wife's not old enough. So the wife comes off title, the husband gets the reverse mortgage, and then he passes away 2 years later. What happens now? The house is, the loan comes due. The loan comes due when the last borrower permanently leaves the home. Well, that's the way it used to be. So what happened in 2013, AARP sued HUD on behalf of 3 spouses who lost the home because their older spouse had a reverse mortgage, passed away, and they had to either sell the house or the bank took the house, whatever. So there was a rule change. Now we base the amount we can loan on the younger spouse. So the youngest spouse is always protected. If the older spouse passes away, the younger spouse can continue to live in the home and stay there. They don't have access to any additional cash, or if the older homeowner was receiving payments, they don't have access to those payments or anything. They can stay there as long as they pay the taxes and insurance and maintain the home and live there as their primary residence. Okay, so we've made changes for that too. But again, the lawsuit and all those things, it makes for bad press. these things just compound on each other. And that's why a lot of people who don't investigate, they don't spend the time to watch this short video about this stuff, realize, oh no, this is a bad deal. I'm going to get ripped off. I'm going to lose my house. I still to this day talk to people who say, well, my husband's brother-in-law's stepson's mother had a reverse mortgage and she lost her house because she had the loan. No, she probably lost the house because she didn't, if it even happened, she probably lost the house because she didn't pay the taxes or the insurance, or she left and thought she could rent the house out or something. The whole thing boils down to education. You have to understand what you're doing. And knock on wood, in almost 20 years of doing this business, I've never had a customer or a family member come back to me and tell me they've regretted doing this loan. And I don't want you to be the first, okay? So you will understand. If you do business with me, you'll understand. Feel free to subscribe to my channel. I've got more videos on my channel, and you can also visit me online at reversemortgageradio.net. I've got a radio show that I play, and I'm going to be running this whole series in more depth so you can learn more about these 4 reasons why reverse mortgages have a bad rap by listening to my radio show as well on my website where the podcast is. Thanks so much for joining me. Hope you have a great day.